Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to analyze ASML stock. I will talk about why I believe ASML is undervalued now. More importantly, I will explain why I believe ASML is one of the best AI semiconductor stocks over the long term. As always, I like to give you more context first. At the time of making this video, ASML's market cap is at around 369 billion. ASML is still much smaller compared to the largest semiconductor companies such as Nvidia, TSMC, and Broadcom. ASML has been down a lot recently because the market is still recovering from the recent large sell-off that was caused by the recent yen carry trade. Also, the market is concerned that the largest hyperscale cloud providers such as Microsoft, Google, and Amazon are overspending on AI infrastructures. This is why many semiconductor companies that are related to AI are still down a lot recently. Here is another issue that is more specific to ASML. The US is considering expanding the so-called Foreign Direct Product Rule or FDPR that will prevent ASML from selling its lithography systems that have US technologies to China. I will talk about this risk in this video. In terms of past performance, ASML has outperformed the S&P 500 by a very large margin over the past 5 years. Semiconductor companies are generally very cyclical and more volatile than the S&P 500. Of course, the best time to buy is when there's a huge correction in the semiconductor market or when there's a huge dip such as in 2022 and 2023. Most of the top semiconductor companies are greatly undervalued or oversold during large market corrections. Also, semiconductor companies are always very sensitive to geopolitical issues. Semiconductor companies tend to be affected the most whenever the US imposes more chip export restrictions and trade restrictions against China or other major countries. The positive side is that top semiconductor companies such as ASML, TSMC, and Nvidia tend to benefit the most whenever there's a huge technological breakthrough. Similar to Nvidia and TSMC, I believe ASML will continue to benefit the most from the current AI revolution. I will talk more about this secular trend throughout this video. So in this video, I will talk about why I believe ASML is undervalued now and why it's one of the best AI semiconductor companies over the long term. You will learn about these topics in this video. I will talk about ASML's financials and its biggest competitive advantage, ASML's biggest risk to consider, ASML's long-term growth prospects, ASML stock valuation, and whether I will buy ASML stock. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about ASML's biggest risk, I would like to talk about ASML's financials, business model, and biggest competitive advantage. So what is ASML? How does ASML earn its revenues and net profit? ASML is one of the top 5 semiconductor equipment manufacturers in the world. ASML is based in the Netherlands. ASML specializes in the design and production of photolithography systems, which are essential for the fabrication of integrated circuits or microchips. ASML's revenue mainly comes from the sale of the most advanced lithography machines, such as its previous gen deep ultraviolet DUV lithography machines and its leading-edge extreme ultraviolet EUV lithography systems. ASML's DUV and EUV lithography machines are mission-critical for producing the most advanced chips used in smartphones, data centers, CPUs, GPUs, APUs, AI accelerators, and other high-tech applications. ASML's biggest competitive advantage, or exclamation modes, is its technological leadership, R&D, and know-how in making the most advanced DUV and EUV lithography systems. ASML's EUV systems are incredibly difficult and expensive to develop. ASML's near monopoly in EUV technology allows the company to charge well above $300 million for each high-NA EUV lithography system. ASML also maintains very strong and long-term relationships with major chip makers such as TSMC, Intel, Samsung, SK Hynix, and Micron. Here's the deal. ASML's lithography systems are mission critical in the semiconductor market. All the leading-edge semiconductor fabrication companies such as TSMC, Samsung Foundry, and Intel Foundry need to buy lithography systems from ASML. Very few companies in the world can afford to buy ASML's most cutting-edge EUV lithography systems. According to DigiTimes, each piece of ASML equipment costs up to $300 million, with a delivery cycle of 12 to 18 months, requiring close coordination with major customers such as TSMC, Samsung Electronics, Intel, SK Hynix, and Micron. The market reports strong orders from TSMC for ASML's EUV product line. In terms of competition, there are only very few players in the world that make DUV lithography systems. Based on what I know, only ASML, Nikon, and Canon make DUV lithography systems. ASML makes the most advanced DUV lithography systems compared to Nikon and Canon. ASML has a monopoly in EUV lithography systems. It's nearly impossible for Nikon and Canon to compete with ASML in making the most advanced EUV lithography systems, because it's very capital intensive and hard to research and develop EUV systems. Moreover, you will need to establish long-term relationships with the largest semiconductor foundries such as TSMC, Samsung, and Intel to convince them to buy EUV lithography systems and be able to support the EUV platform for many years. This from Morningstar. It explains ASML's biggest competitive advantage and its large economic moat. We believe ASML will remain the top lithography equipment provider in semiconductor foundries for at least the next 2 decades. Taiwan's semiconductor manufacturing, Intel, and Samsung's fabs were redesigned 1 decade ago to make them suitable for extreme ultraviolet lithography or EUV, a costly and long endeavor, so it's quite unlikely ASML will be displaced for its place in the foundry. In addition, no competitor has yet matched ASML's technological leadership, and the company's competitive advantage will likely keep expanding as it grows its already high €4 billion research and development budget. Despite the high price of ASML's machines, the company provides value to customers by bringing down the cost per wafer through increased productivity. This focus is crucial, as customers need to see a return on investment when they spend €200 million to €300 million on a single lithography machine. ASML's machines are the bottleneck of the fab, so if productivity stagnates, customers could look for workarounds to reduce their dependency on lithography. ASML's machines can last more than 30 years. The firm sells the machine at an attractive gross margin, but then keeps generating recurring service revenue for many decades. ASML EUV machines are more complex than previous deep ultraviolet or DUV ones, which means a higher potential for service revenue during its lifetime. 90% of ASML's lithography equipment that has been sold is still functioning and generating service revenue. Management expects to increase service margins in the next decade as it focuses more on this segment and launches more complex machines. Software and hardware upgrades are also a high margin business, although this can be more cyclical given the foundry needs to stop production to implement them. I want to show you these financials. Every quarter, ASML earns most of its revenues from selling DUV and EUV lithography systems. ASML also earns revenues from servicing and upgrading these lithography systems. These lithography systems can last for more than 30 years. They will continue to generate servicing revenues for ASML over time. In terms of margins, ASML has a very strong gross margin that is often above 50% in most quarters. ASML's operating margin is also very strong. It's often well above 20% to as much as 30% in most quarters. All these margins show that ASML can often maintain strong margins, even during a large correction in the semiconductor market. Here's the important part. If you want to know ASML's future revenues and earnings, you have to look at ASML's net bookings each quarter. The lead time to deliver ASML's EUV systems to customers is very long. Typically, the lead time is around 1 to 2 years. This means TSMC, Intel, and Samsung will need to order EUV systems from ASML at least 1 year in advance to receive their EUV systems 1 year later. At the time of making this video, ASML has a very strong balance sheet. According to the most recent quarter, ASML had 5.02 billion euros in cash and 4.6 billion euros in long-term debt. This means ASML can pay off its long-term debt in advance and still have around 0.41 billion euros left. Over the past 10 years, ASML had very consistent revenue growth and operating income growth. However, ASML's free cash flow dipped a lot over the past 3 years from the peak in 2021 to now, mainly because of the large correction in the overall semiconductor market. There was too much chip inventory after the pandemic boom, so many lithography systems and chipmaking machines were underutilized. As of now, the semiconductor market has started recovering because of the very large demand for AI applications and AI chips that are needed to train and infer AI models. Going forward, we can expect that ASML's free cash flow will grow again over the next several years. I will talk more about this later on in this video. If you're a dividend growth investor, you will want to know this. ASML returns a large portion of its free cash flow to shareholders every year. Going forward, ASML will continue buying back more shares and pay more dividends to shareholders over time. Let's talk about ASML's biggest risk going forward. The first biggest risk is always geopolitical risk. This risk applies to all the top semiconductor equipment manufacturers, such as ASML, Applied Materials, NAND Research, and KLAC, because a lot of their revenues come from China almost every year. So whenever there are geopolitical tensions and trade wars between the US and China, these largest semiconductor equipment manufacturers tend to get impacted the most if they are not allowed to sell their chipmaking tools to China. Right now, there's a chip war between the US and China. The US does not want China to achieve chip sovereignty and does not want China to become the leader in AI. The US wants to be the chipmaking leader and the leader in AI instead. Also, the US does not want China to have access to the most advanced process node technologies, such as 7nm, 4nm, and 3nm process nodes. Of course, the easiest way to accomplish this is to restrict ASML from selling its most advanced EUV and DUV lithography systems to Chinese customers. ASML is already restricted from selling its EUV lithography systems to Chinese customers. According to this article, the US is considering expanding the so-called Foreign Direct Product Rule, or FDPR, that will prevent ASML from even selling its large-gen DUV lithography systems that have US technologies to China. If you look at this net system sales by geography here, you can see that China has contributed about 49% of ASML's total net system sales over the past 2 quarters. Of course, ASML can only sell the lower-end DUV lithography systems to Chinese customers and not the cutting-edge EUV lithography systems to China. Here is the situation now. Before, Taiwan and South Korea used to be ASML's biggest customers. Now, at least in recent quarters, China has become ASML's biggest customer. Chinese companies have been stockpiling and buying many DUV lithography systems from ASML in recent years because they know that the US will likely impose more chipmaking tool export restrictions on China. Since Chinese companies cannot buy EUV lithography machines from ASML, the best alternative is to buy more lower-end DUV lithography machines from ASML, Nikon, and Canon. According to this article from Reuters, certain US allies such as the Netherlands, Japan, and South Korea will be exempt from the upcoming newly expanded foreign chip equipment export restrictions. President Joe Biden's administration plans to unveil a new rule next month that will expand US powers to stop exports of semiconductor manufacturing equipment from some foreign countries to Chinese chipmakers. But shipments from allies that export key chipmaking equipment, including Japan, the Netherlands, and South Korea, will be excluded, limiting the impact of the rule. As such, major chip equipment manufacturers such as ASML and Tokyo Electron will not be affected. The rule and expansion of what is known as the Foreign Direct Product Rule would bar about half a dozen Chinese semiconductor fabrication factories, or fabs, at the center of China's most sophisticated chipmaking efforts from receiving exports from many countries, according to one of the sources. Here's the deal. Based on my understanding, the US is only restricting China from accessing the most advanced chipmaking technologies and tools. The US is only restricting China from buying ASML's EUV lithography and high-end DUV lithography systems. This is my prediction. It does not make sense for the US to restrict China from buying the older gen DUV lithography systems from ASML because the US and its allies still need China to mass manufacture older chips that are based on very mature process nodes. For example, the US and European countries still need China to mass manufacture older chips that are used in cars, electric vehicles, machines, PCs, Internet of Things devices, and any devices that do not need leading-edge chips. Based on what I know, ASML can still sell the older gen DUV lithography systems to China. ASML is only restricted from selling EUV and high-end DUV lithography systems to China. This is another risk we should consider. ASML's biggest customers are TSMC, Intel, and Samsung. If TSMC, Intel, and Samsung decide to cut their capex, it will likely impact ASML's bookings and revenue growth because ASML's lithography machines are usually the biggest investments. As you may already know, Intel is not doing well at all right now. In fact, Intel is planning to reduce its capex by more than 20% in 2024. Next year, Intel is planning to cut its operating expenses and capex by 10 billion or more. This means Intel may order fewer lithography systems from ASML next year. Of course, it's too early to tell right now. I want to show this to you again. It shows ASML's biggest risk whenever there's too much chip inventory or whenever there's a large correction in the semiconductor market. I said this many times before. Semiconductor companies are by nature very cyclical. They tend to perform exceptionally well when the semiconductor market is recovering and whenever there's a very large demand for high-performance chips, such as the most bleeding-edge AI chips from Nvidia. However, semiconductor companies tend to underperform whenever there's too much chip inventory and not enough utilization in chipmaking equipment and semiconductor fabs, and whenever there's a large correction in the overall semiconductor market. This is what happened right after the peak of the pandemic. There was too much chip inventory. Right now, the entire semiconductor market has been recovering gradually since the bottom in 2023, mainly because of the very large demand for LLMs, AI applications, and high-performance AI chips that are needed to train and infer AI models. Outside of AI chips and HBM memory markets, most semiconductor markets are still slowly recovering. Now let's talk about ASML's long-term growth prospects. I will explain why I believe ASML is still one of the best AI semiconductor companies over the long term, even if we consider the biggest risk I talked about earlier. First, let's look at this revenue forecast here. ASML's management stated that 2024 is a transition year for ASML. ASML's management stated that the company's full-year revenue will likely be very similar to last year. However, starting next year, ASML's revenue will start to accelerate again because TSMC, Intel, and Samsung's new fabs in the US are starting to come online. These new fabs will need ASML's most advanced DUV and EUV lithography systems next year. This is why ASML's revenue is expected to stay flat this year, and its revenue is expected to grow much more starting next year. I mentioned this earlier. Typically, once a customer places an order from ASML, it usually takes ASML 1 to 2 years to deliver an EUV system to the customer. This means ASML can often predict its future revenues by looking at net bookings every quarter and order backlog every quarter. Now, let's take a look at ASML's revenue guidance here. In 2025, ASML expects that the company's annual revenue will be between 30 billion euros and 40 billion euros. In the most recent earnings call, ASML's management stated that the company's 2025 revenue will not be at the lower end of this range. This means ASML's 2025 revenue will likely be somewhere between 35 billion euros and 40 billion euros. Over the longer term, ASML expects that the company's annual revenue will reach between 44 billion euros and 60 billion euros by 2030. Also, ASML's management expects that the company's gross margin will grow gradually and be between 56% and 60% by 2030. ASML's management said this in the most recent earnings. This tells you ASML's expected growth going forward. Let's switch now to our longer-term outlook. When it comes to demand and our business beyond 2024, we expect, as we discussed in previous quarters, that the overall semiconductor inventory levels will continue to improve. We also see today further improvement in lithography tool utilization levels at both logic and memory customers. While there are still uncertainties in the market, primarily driven by the macro environment, we expect a continued industry recovery in the second half of 2024. We currently see strong developments in AI, driving most of the industry recovery and growth ahead of other market segments. Based on discussions with our customers and supported by our strong backlog, we currently expect 2025 to be a strong year, driven by a number of factors as mentioned last quarter. The secular growth drivers in the semiconductor end markets are still very much intact. The energy transition, electrification, and AI will continue to drive demand. We also see an expanding application space, along with increasing lithography on future technology nodes. This will also drive demand for both advanced and mature nodes. The industry expects that to be in a cyclical upturn in 2025. As a result, we need to prepare for a number of new fabs that are being built today across the globe. Those fabs will be spread geographically and are strategic for all our customers. They are all scheduled to take our systems. Here's the important part. In Q2, our net bookings came in at 5.6 billion euros, of which 2.5 billion euros in EV systems. At the end of Q2, ASML had a backlog of around 39 billion euros. This order backlog is already higher than ASML's expected revenue in 2025. Of course, ASML will continue to have more net bookings every quarter between now and 2025. There are several secular growth trends that will continue to benefit ASML over the next decade. Let me explain here. First, the current AI revolution will continue to benefit ASML because all the AI chips from Nvidia, AMD, Intel, Google, Amazon, Microsoft, Meta, and Tesla will need to be manufactured using ASML's most advanced EUV lithography systems. These leading-edge AI chips and large AI data centers consume a lot of power. It is essential to use ASML's EUV lithography machines to make AI chips and server chips much more energy efficient going forward. Second, there's an enormous demand for more advanced process node technologies, such as the upcoming N2 process. After that, there will be N-strong process nodes that will be even smaller, more energy efficient, and more powerful than the N2 process. This means ASML's largest customers, TSMC, Intel, and Samsung, will need to order more EUV lithography systems from ASML to meet customer demand, even if ASML's EUV systems are extremely expensive. TSMC is planning to increase its capex next year in order to expand its fabs in the US and Taiwan and to meet customer demand. This will benefit ASML. Third, TSMC, Intel, and Samsung are expanding their fabs in the US, Europe, and other Asian countries. For example, TSMC is building new fabs in the US, which will likely go online starting next year. Samsung is building its leading-edge fabs in the US, which will likely go online starting next year. Intel is also building more leading-edge fabs in the US to help the US become a chip-making leader again. The important part is this. All these new fabs will likely start coming online next year. This means ASML will need to deliver more DUV and EUV lithography systems to TSMC, Intel, and Samsung next year. This is why ASML's revenue growth will be much higher starting in 2025. Here is another secular trend that will continue to benefit ASML the most going forward. According to a recent ASML presentation, N-strong process nodes will come after the N2 process. For example, the A14 node is expected to start sometime in 2027. Then by around 2039, we will likely have a sub-A2 node. Here's the important part. To achieve all these leading-edge process nodes, TSMC, Intel, and Samsung will need ASML's latest high-NA EUVs and eventually ASML's hyper-NA EUVs in the upcoming years. ASML's lithography systems are mission critical. TSMC, Intel, and Samsung will need ASML's most advanced EUV lithography systems in order to shrink transistors even more and achieve these upcoming N-strong process nodes over the next decade. At the time of making this video, ASML's most advanced lithography system is the high-NA EUV system. By around 2032, ASML expects that it will have hyper-NA EUV lithography that will be even more expensive and much more advanced than the current high-NA EUV system, which is already very expensive. According to Tech Power Up, ASML has revealed that its cutting-edge high-NA extreme ultraviolet EUV chipmaking tools called high-NA twin scan EXE will cost around 380 million each, which is over twice as much as its existing low NA EV lithography systems that cost about 183 million each. Here's another important part. ASML's Hyper NA EV system will be even more expensive than the current leading-edge high NA EV system. According to TrendForce, ASML's Hyper NA EV system's pricing is rumored to double the current high NA EV system. This means ASML's Hyper NA EV system will likely be over $700 million each. This is my prediction. I believe TSMC, Intel, and Samsung will continue using more high NA EV systems to achieve N-strong process nodes. However, to achieve a sub-A2 process node, they will eventually need to invest in ASML's Hyper NA EV system, which is expected to be available by around 2032. Let me show you this Wall Street revenue forecast here. According to Seeking Alpha, ASML's annual revenue is expected to stay flat this year. Starting next year, ASML's annual revenue is expected to grow around 33% year over year because many new fabs will start to come online in the US. Over the longer term, ASML's revenue is expected to grow anywhere between high single digits and mid-teens each year. In terms of EPS forecast, ASML's EPS may drop slightly this year. However, next year, ASML's EPS is expected to grow as much as 59% year over year because many new fabs will go online next year. After that, over the longer term, ASML's EPS is expected to grow between mid-teens and high teens each year in most years. Let's look at ASML's forward PE evaluation. At the time making this video, ASML's forward PE is expected to be around 43 this year, which is high. But we have to look at ASML's next year's forward PE because ASML is expected to have much higher revenue and EPS growth next year. Next year, ASML's forward PE is expected to be much lower at around 27. In my opinion, this is very low for a leading-edge semiconductor equipment manufacturing company. I believe this forward PE suggests that ASML is likely undervalued now. I want to show you this intrinsic valuation model here. I always use this intrinsic valuation model to calculate each stock's intrinsic value. You can use it to calculate ASML's intrinsic value so you will know when ASML stock becomes undervalued, fairly valued, or overvalued. If you want this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define ASML's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 11% here. You can use a higher discount rate here if you want to be more conservative. Based on the biggest risk and the long-term growth prospects I talked about earlier, I believe ASML's revenue will stay flat this year. Next year, I believe ASML's revenue will grow between 30% and 35% year over year. The 32.5% year-over-year growth is the base case scenario. After that, I believe ASML's revenue will grow at a compound annual growth rate CAGR between 10% and 15% each year over the next several years. I believe these revenue growth rates are very reasonable. My revenue growth estimates are very close to ASML's long-term revenue guidance. I used a long-term growth rate of 9% to calculate the terminal value. Typically, the overall semiconductor market, excluding memory, grows around 10% each year. This is why I believe a long-term growth rate of 9% is very reasonable for ASML. Of course, if you want to be more conservative, you can use a lower long-term growth rate to calculate the terminal value. Over the next several years, I'm assuming ASML's free cash flow margin will improve by around 2% each year. Let's go over these three case scenarios: worst case, normal case, and best case scenarios. All these scenarios assume that ASML's revenue will stay flat this year. Under the worst case scenario, we're forecasting that ASML's revenue will grow at a CAGR of 30% next year. After that, we're forecasting that ASML's revenue will grow at a CAGR of 10% each year over the next several years. Then ASML's intrinsic value should be around $366 billion for the entire company, or $931 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that ASML's revenue will grow at a CAGR of 32.5% next year. After that, we're forecasting that ASML's revenue will grow at a CAGR of 12.5% each year over the next several years. Then ASML's intrinsic value should be around $399 billion for the entire company, or $1,013 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that ASML's revenue will grow at a CAGR of 35% next year. After that, we're forecasting that ASML's revenue will grow at a CAGR of 15% each year over the next several years. then ASML's interest value should be around $433 billion for the entire company, or $1,100 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, ASML's interest value should be around $1,014 per share. I also use a 4 sales valuation model to estimate ASML's interest value, which should be around $390 billion for the entire company, or around $992 per share. If we take the average of both valuation models here, I believe ASML's interest value should be around $1,003 per share. Just to compare, Morningstar has given ASML a slightly lower fair value of $990 per share. This means I believe ASML is slightly undervalued now. So will I buy ASML stock? Full disclosure, I already have ASML stock in my stock portfolios. This is one of the accounts that have ASML stock. At the time making this video, it's up around 48%. I bought ASML several times when it was much more undervalued before. Going forward, I will likely buy more ASML gradually, as long as it's still undervalued. First, I do not believe the US will restrict ASML from selling the older gen DUV lithography systems to China, because the US and its European allies need China to continue mass manufacturing older chips that do not need leading-edge chip technologies. Second, I like ASML's near-monopoly lithography business, especially its EUV lithography systems. It is nearly impossible and too capital-intensive for competitors such as Nikon and Canon to develop their EUV lithography systems to compete with ASML. Third, I believe ASML will continue to benefit the most from the semiconductor secular trends, such as the very large demand for energy-efficient AI chips and the continuous advancements in process node technologies. And fourth, more fabs will start to go online in the US starting next year. Also, TSMC, Intel, and Samsung will continue building more fabs around the world. Of course, this will benefit ASML the most going forward because all these new fabs will need ASML's DUV and EUV lithography systems. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.